starting?
Yeah, so I think first of all, I think to be a good real estate investor, you kind of need to have a long-term perspective. Um, Real estate is a long-term long-term game. Now, certainly in the multifamily space, 2018, 19, 20, 21, it didn't have to be a long-term game. People were flipping apartments left and right. And that was just because interest rates dropped, cap rates dropped, and it was able to kind of turn these properties over sooner. But in general, that's not how the real estate market really works. So in my mind, take a long-term perspective and buy these properties right. And what I mean by that is, one, don't over leverage the property. Two, get long-term fixed rate debt, because I think that's really one of the major advantages to real estate as opposed to other asset classes. You can get long-term fixed rate debt. And then the other thing is have ample cash reserves for when Murphy's Law strikes, when your roof leaks or there's a fire. Stuff is going to happen. And so if you go into it, lower leverage, ample cash reserves, long-term fixed rate debt, you can ride out the inevitable downturns. And so right now, maybe the real estate market's having a little bit of a downturn, but I would ask, people may be afraid, is this a good time to invest? And I hear the market may crash or it may go down a little bit more. I would simply ask people in your community, do you believe the price of housing, either rent or sale, is going to be lower 5 years from now, lower 10 years from now than it is today? And I think most people could legitimately say, no, long term, the price of housing is not going to go down. That's not our life experience. If we were to go back over the last 30, 40 years, the value of real estate has gone up. And yes, you might have 4 or 5 years up, a year or two down, a year or two flat, and then you got another 4 or 5 years up. So if you have a long-term perspective, you buy these properties in a secure way, operate them professionally, you can ride out a little bit of turbulence. And the only people who ever really get hurt in real estate are folks who are forced to sell in a down market. And as long as you set it up properly, low leverage reserves, fixed rate debt, you're never going to have to sell. You just keep operating the property. And like I can tell you, in 08, 09, the Great Recession, the subprime crisis, I had a bunch of rentals. And yes, the value of those properties went down, but I didn't really care because they were supporting themselves. And what I mean by that is the rent is enough to pay the operational expenses and your debt. So they're self-supporting. So I just kept running them as rentals. And today they're worth way more than they were back in 08 and 09, right? And it was just a matter, I just had to get through that turbulent period. So if you do it right, it's fairly secure. And then just take a long-term perspective. People talk about timing the market. I'm not one that actually believes you can always time the market. For me, it's put your capital work, keep it in the market as long as you can. The longer your capital's in the market, the higher probability of success you're going to have.